Hi everybody. So I'm going to walk you through these practice problems for Module 3, and I want to note that they are pretty much exactly like the homework that you're going to be graded on. Definitely exercise 1, 2, and 3. These are using a specific set of numbers, and then the numbers in your homework will be different. But it's the same procedures, and so this is just to give you a chance to practice doing these recording of transactions, just so that you know where financial statements arise from. Okay, so what I'm going to do is just walk you through all these. I'm not sure how many videos it will take to do it. I like to keep them 10 minutes or so. The last one, exercise 3.13, that's just one of those adjustments. I'm going to give you an example of how to do it, and then I'm going to set you off on your own to do a few adjustments in your homework. Okay, so this transaction analysis is, it's fundamental. If we were face to face, we'd be playing some Monopoly to get you used to doing it. If you guys know of any Monopoly online, let me know. So I'm going to make my face go away and carry on forward. So the first thing I want to note is that I've set this up in Excel. And I've made my spreadsheet look kind of like this data entry sheet in the Cengage homework. You don't technically need to do that, but where it starts to get useful to have this in Excel is all these requirements to write down the balances. So let's just take an overview of this problem. So we have the 5th season for February 2024. We have all these transactions, and we need to enter them in our double entry method. And the other thing I want to note is that simultaneously, while you're entering the transactions, you should record them appropriately down here to flow into the cash flow statement and the income statement, so that we'll be able to do the financial statements when we get to the end. Okay, so let's just dive in. So the first transaction is he invested $15,000 in the 5th season in exchange for common stock. All right, so what you need to do, all of these column headers up here are drop down items, so you need to figure out what the column headers are as you're going. And obviously, when we're doing these, the first one is going to be cash. And over here on the equity side, you're going to have common stock, right? So this is just like what we went through in the PowerPoint. And so now what I want to do is go over here and fill these in Excel, so that Excel will do the addition for me. Again, it's not strictly necessary to do that. I hate using a calculator if I can avoid it. Right, so here we have an investment of $15,000, and we have common stock of $15,000, right, over here. So we enter everything. Let's say investment. Okay, so you always make sure and enter everything at least 2 times, such that the balance sheet always balances. As a matter of fact, you know what we'll do? Let's set up in here in our equals column, let's just make sure that they do. So in our equals column, what we can do is ask, what's the difference between all the assets, right, the sum of all of the assets. We've got 3 columns for assets, and then let's subtract out the sum of all the liabilities and equity, and just make sure that that difference is 0. If it's not 0, then we've done something wrong. Okay, so that's 0, so we can be reasonably assured that our first entry is right. And if you wanted to, because I've got these check my works set to be infinite, you could check your work every step of the way, but what'll happen if you do that every step of the way, it'll come back with a million X's on it, right? So you may as well continue forward and do the whole thing, and then check your work and see if you did anything wrong. Okay. So the second transaction, let's see what our choices are. We paid $2,700 for a 1-year insurance premium. So let's see, paid insurance, and that's a negative $2,700. right? And we paid insurance for $2,700. And so what we've got now is an asset, prepaid insurance. Let's see if we can find it. There it is. Prepaid insurance here, right? So let's put that in the third column. Right? And so again, we can pull this equals down and make sure that our assets are equal to our liabilities and equity. Okay, now the next thing you need, actually, now I forgot to do something which I told you to, right? So down here we have transaction A in the statement of cash flows, and we need to identify what kind of a cash flow it is. Now there's three different types of cash flows: operating cash flows, investing cash flows, and financing cash flows. And even though this is an investment in the company, right, it's a financing cash flow because it involves obtaining funding or paying back funding that you've obtained. Right, so we're going to make that 15,000, and we don't have anything over here to enter transactions A or B. Right, so that's because it's not an income statement transaction. So in B, right, we paid our insurance, and that's an operating cash flow. Because insurance payments, even though we haven't recognized the expense yet, what we did was purchase an asset with it, but it will be expensed. Right, so that's a negative 2,700. And I'm going to just go ahead and fill these out over here and not on my spreadsheet. Because it would take too long. Okay, so our balances here, we've got cash of 12,300, and we can just copy that equation all the way over. Now what he says in the instructions is, after each transaction, enter a balance for each item. If an amount box does not require an entry, leave it blank. Okay, enter amount decreases and net cash outflows as negative amounts. Okay, so our balance here in the cash column is 12,300. We haven't done anything in the second asset column, and we've got 2,700 in total insurance. And we've got 15,000 in common stock. Okay, so most of our boxes are still empty at this point. Okay, transaction C. We purchased supplies on account. Okay. So no cash was involved. We have supplies, right? We have supplies that we purchased for $900, and we took on a liability called an accounts payable. So we owe that money. Right, so we have $900 in supplies. We have $900 in our accounts payable. Right, we haven't changed anything else. Let's just make sure that our balance is balanced. So these, again, these are the changes, right? So let's go ahead and transfer that over. No cash. Our supplies goes up by 900. Our accounts payable goes up by 900. And now our balances are going to be okay, now we're going to fill in all of these columns that actually have a non-zero balance. So it's 12,300 here. 900 in our assets, in our supplies asset, 2,700 in our prepaid insurance, 900 in our accounts payable, and 15,000 in common stock. Right, so nothing, I want to note that nothing has been happening over here in what we know is going to be our retained earnings column until now. Right now, we received fees of $2,800 during February. I'm sorry, not 2,800, 28,500. Okay. So that now goes into our retained earnings column. Okay, so we're going to do that. Fees earned, 28.5. Equity is 28.5. Okay, so that's an income statement item. So this is transaction D, which is the income statement, fees earned. You know what, let me make this window a little bigger. There you go. 28.5. Okay, and of course the reason that I do this so that I can easily copy the balance equation, copy, paste. And so now, right, we have $40,000 in cash. We have 900 in our total supplies, 2,700 in our prepaid insurance, 900 in our accounts payable, 15,000 in stock, and 28.5 in equity. Our equation balances, we see that our difference here, the 0, which is the equation that tells us whether the sum of all the assets equals the sum of the liabilities and equity, which it does, and we're in good shape. Okay, we just have 2 more to do. Oh, you know what? Let's catch up here. So we have our fees earned are an operating cash flow, which is 28,500. And so go on to E now. So we paid expenses of wages, rent, utilities, and miscellaneous. So we have to go over in here and note that we paid expenses. And what we can do, right, we're going to take the negative, we're going to put in a parenthesis, and then we're going to enter the data in Excel. So it's 10,800 plus 3,200 plus 1,400 plus 1,600. Close the parenthesis, and that should give us the sum there, which we can just enter over here. So there's going to be a negative 17,000. And that reduces our retained earnings. So let's just say paid expenses here. Our retained earnings reduces negative 17,000. Okay, we can fill in the balances. So that's that same thing where you just add them up. So our balances and our cash are 23.8. And in supplies are 900. And in prepaid insurance is 2,700. And in accounts payable is 900 again. 15,000 again. And our retained earnings, if I just got to go over here and scooch over my Excel sheet, our retained earnings is 11.5, which is our net income at this point. Okay, and so now what you need to do is go down into the income statement and write all these expenses, which let's just go pick them up on the left-hand side first. If you see the word expense, you know you're in good shape, right? Wages, rent, utilities, and miscellaneous. So our wages were 10.8. Rent was 3,200. Utilities was 1,400. And miscellaneous was 1,600. Okay. Now, because this is a positive sum here, right? So 28.5 minus 17,000 is 11.5. This is going to be profit or net income, another word for profit. And our net income at this point is 11,500. And then the last transaction is we paid dividends. So we paid dividends, so that was a negative cash flow of $4,000. Right, nothing else to enter here except that it reduces retained earnings. Okay, so let's catch up with everything. So we paid dividends, negative 4,000, negative 4,000 on the retained earnings. Do the balance, sum them up, copy, paste. So we have, right, a total cash in the bank at this point, 19,800. I mean, this is really kind of like our checking account, right? 900 here, 2,700 here, 900 here, 15,000 here, and 7,500 here. Okay. Now, what are we missing? We have to go ahead and put the cash flow for transaction E. Paying your expenses is also an operating cash flow. Okay, because it has to do with actually running your business. So that's a negative 17,000. And then paying dividends is a financing cash flow because it has to do with where you're getting the money for your business. Not where you're getting operating income for your business, but where you're getting the financial capital for your business, either through bank loans or through owner's investment, or conversely through paying back bank loans or providing dividends to owners. So this is a financing cash flow, and that's a negative 4,000. And all of these sum, this is a net increase in cash of 19,800. All right, so a couple things to note, right? You had 11,500 in net income, but you had 19,800 in cash in the bank at the end of the day. Why? Because of this 15,000 you put in for the financing. Okay, so that's how you do the transaction analysis for the practice problem number 1. Now your actual homework problem, exactly the same, different numbers, different story maybe, but this is how you record transactions, and I want you guys to practice it, and then I want you to do it.